Hello, I'm Gunnar DeLay. Welcome to another installment of Common Sense. This week we'll be talking about exit strategies or business transition plans. I have a friend that has several different business ventures, and he tells me the first decision, the most important decision, is how will he exit that business? Because you don't want to be in a position where it's time to retire or step out of the business and you really don't know how you want to handle that question, especially if you have partners and co-owners in the business. So let's talk a little bit about what your options are. First, if you own a small business and you have partners and co-owners, you definitely want a buy-sell agreement, and you want one that's well drafted. I oftentimes see agreements that don't really address how the business will be evaluated or other contingencies besides death. The typical scenario is a life insurance agent comes in, tells you you need a buy-sell, they hand you a standard form and sell you a term life insurance policy. Well, what happens when the term runs out? Or what happens if somebody wants to leave the business and they haven't died? Maybe they just want to retire or there's a disability. So those contingencies have to be addressed, and especially the most important is the evaluation of the business. How will that take place? Who will do that evaluation? So you want to make sure you use somebody skilled in drafting buy-sell agreements. The other thing you want to think of if you're a sole business owner is, do I want to sell to somebody inside the business or an outside third party? Maybe you have a family member or a trusted employee that you want to transition the business to upon your departure. Again, evaluation is a key element there, but how will you fund that purchase? Will you do it, have that person go to the bank and take out a loan? Maybe that's not practical. One of the favorite strategies I like to employ if you're selling to somebody inside the business is the use of a cash balance plan. That is a retirement plan on steroids, but what it allows the purchaser to do is basically to fund the buyout using a retirement plan and putting big chunks of money in that plan that they can deduct on their taxes, and you as the seller can take that money tax deferred, just like an IRA. So you don't have to pay capital gains on the sale of the business. But that's just one strategy that can be employed. Finally, if you're going to sell to an outside third party, you want to probably get connected with a very skilled and experienced business broker. There's a lot of brokers out there. Some know what they're doing and others don't. But you want to make sure that they know how to evaluate a business and what kind of experience they have in marketing businesses. So if we can help you with business transition issues, call us at Cambridge Wealth Management. My number is 479-783-0467, and we can be found on the web at www.cambridgefg.com. Hope you have a great day.